Bear markets are tough. Sometimes the toughest part about a bear market is that we aren't even fully aware that we are in a bear market. In this video, I'm going to go over how I set up my investments in the best possible way throughout a bear market so that we can get the best returns when we turn back to a bull market. As always, if you do find this content useful, make sure to like or comment on the video and please subscribe to the channel because it really helps us out. Okay, let's get to it. The first aspect we need to take into account is psychology. As illogical as this might sound, markets are all about psychology, about manipulating and playing on people's fears and hopes. When markets are rising, people are thrilled. They continue to throw money at their investments, convinced that the markets will go up, not really having an exit plan. The opposite is true for bear markets. People are convinced that their investments are going to go to zero, the world's going to end, and they're going to lose all their money. In a bear market, you want to be smart. You want to go against the current. If you feel that the sentiment around the specific project or coin is that it's dropped 50 to 75% over the last couple months, but you're convinced in this idea, then that's when you want to be getting into these projects, when everybody's full of fear and trying to get out of these projects. When others are fearful, that's when you want to be greedy. That's when you should view this as an opportunity to get in at a huge discount, not that the price is significantly dropped compared to where it's been at its all-time high. You want to go against the current because unintelligent and unexperienced investors will tend to believe that whatever the general population is doing is the trend that they should be following as well. So that when they see that the price is down 50%, they're going to panic and sell their holding. So first point, use psychology to your benefit. Know the market, go against the trends, and be smart. The second aspect we need to look at is that you know your research, you've properly vetted the team, and you believe in the project and the coin itself. If you've properly done your research, a bear market should not scare you. You have to look at the fundamentals of a project and look at the aspects. Are they better positioned than they were during the last bull run? Are they just as well positioned? Do they still have promises? Have they delivered on their promises? If the answer to any of these questions is yes, then a bear market should not scare you. Elrond, my favorite crypto project and the one I'm most heavily invested into, is a prime example of this. Last year, after they launched their Myer wallet application, there was a buzz of excitement around all the features that they would be launching later in the year. At the time, the price was close to $120 and everybody was buying in early, excited about all that would be dropping later in the year and seeing the potential in the project and the coin. As the year progressed, the team at Elrond, and in my personal opinion, one of the best teams in all of crypto, successfully delivered on all they had promised. They launched the Myer exchange, the Myer Launchpad, they integrated NFTs into their Myer application, and they were just constantly putting out everything they had set out and promised to do. At one point, this led to the price of Elrond being well over $400. Today, after they had delivered on everything they promised 1 year ago, when the price was at $120, the price is currently sitting at about $80 because people are scared. We're in a bear market and people don't want to invest or put their money into something. The fundamentals of Elrond haven't changed. They've only gotten better and more ingrained into what they've been promising to do. Their technology is better, they have more features, and they're consistently building on an absolutely phenomenal product. What I'm trying to say is, if last year, before they delivered on any of these features that they now have, you were convinced that $120 is a fair price for Elrond, then why today, in 2022, when they actually have these features, are you scared to get in at $80? The point of all of this is that if you're convinced that buying into promises made during a bull run is a good idea, then you should be just as convinced that buying on promises delivered is a great idea in a bear market. Trust your research. The third and final aspect I'm going to be touching on is that we need to view our investments as just that, long-term investments. Trying to day trade your way through a bear market is a pretty much guaranteed way to lose all your money. Not only that, but you're going to be constantly checking your portfolio, stressed to see if you've been losing money throughout the day. You need to be mentally prepared that you might put in $100 today, and in 1 month, that $100 will be worth $70. But then maybe in 6 months, that $100 will now be worth $250. We're playing the long game here, and you need to be prepared that there might be some rough waters, but at the end of the day, the calm will come. You should never try to time the bottom of a bear market because 99% of the time you will be wrong. What you can do, however, is dollar cost average. And what this means is that if, let's say, you have a sum of money and you buy elrond for $100 in the first month, then the second month the price of elrond drops down to $50. Well, now if I buy Elrond again at $50, I have an overall average buying cost of $75. So this effectively lowers the price that you got into a project at, making it much more bearable even in a bear market. You have to accept and be okay with the fact that you might not get in at the lowest price possible, but that's irrelevant in the long term. Look at people that bought Bitcoin. I don't think they care that they got it at $8,000 instead of $7,900. Long term, these price fluctuations won't care if you have a solid project and that you believe will grow anyways. This is a long-term investment and it needs to be viewed just as that. For me personally, these are three very important points that I take into account when investing in a bear market. Psychology of people, and that the market is based solely on psychology. Vetting the projects, doing my research, and making sure I have sound, proper research that I believe in, and viewing it as a long-term investment, knowing that I'm here for the long run and that slight fluctuations in price won't affect me. If you make these three habits part of your bear market investing, success is very likely to follow. Now, I just want to make it clear once again that I'm by no means a financial advisor, and you always should do your own research before investing any amount of money into the market, and never invest more than you're willing to lose. Thank you guys again for watching my video. If you did find it helpful and enjoyed the advice, then please consider giving a like or a comment and subscribing to the channel because it really helps us out. See you next time.